Howdy, everybody. Welcome to Liberty Call for January 3rd, 2025. After a rough start to the year, markets are finally caught a breather with the Dow up over 250 points, but Tesla stock is still sputtering after a disappointing delivery report with Chinese automaker BYD keeps eating their lunch. In other news, Morgan Stanley has ditched a major climate alliance, joining the growing list of banks stepping back from ESG commitments. Manufacturing data shows some signs of life, but it's still below break-even levels, and uranium stocks are on the rise after a supply scare in Kazakhstan, because why not throw more uncertainty into the mix? Buckle up, folks. We got a lot to cover today. But before we do, let's, if you could, do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All righty, folks. Let's get into the markets for today. Short week. Well, I guess some people worked at the beginning of the week. I was taking some time for myself. All right. Dow Jones was up 0.82%, 346 points, closed at 42,738. S&P 500 up 1.26%, 74 points, closed at 59.42. NASDAQ up 1 3/4, 338 points, closed at 19,619. The VIX was down 9.82% today. It's at 1617. Canada up 0.7. Brazil down 1.37, and Mexico down 1.57. In Europe, Germany was down 0.58%. The UK down 0.44%. France down 1.51%. The Netherlands down 0.29%. Spain down 0.22%. Italy down 0.72%. Switzerland was up 0.04%, and Portugal up 0.51%. Russian exchanges both down today, 2% on both the MOEX and the RTSI. And the overnight markets, the Nikkei still not open. Let's see, Australia was up 0.6%. New Zealand was down 0.4% when it closed on the 7th. And to the Chinese markets, the Shanghai was down 1.57%. The Shenzhen component down 1.89%. China A50 down 0.75%. DJ Shanghai down 1.65%. Hang Seng up 0.7%. And the Taiwan weighted up 1/3. All right. So those are our markets, folks. All righty. Well, let's bring up our chart and look to see what our markets did for the week. All righty, let's start out here on, the close on the 27th. Let's see here. We're going to finish. The Dow Jones will finish the week down about 0.34%. The S&P 500 down about 0.21%. The NASDAQ down about 0.63%. Transports down about 0.18%, and the utilities looks like they're going to finish up in the green by 1.44%. All right, well, let's zoom out and take a look and see how the markets are lining up early in the year here. So we can see we had this nice strong uptrend through the second half of last year. And then at the beginning of December, it fell apart and has started to form a new trend line here. So we'll see what happens here in the next few weeks to see if this really starts to shape up and head in a real negative direction, or if this is more short-lived. So chart looks a little not quite as don't quite have the same trend line shaping up here yet on the S&P 500, and then on the NASDAQ. We do have a little bit of a trend line, so we'll see if we get a breakthrough, or if, again, the downtrend continues into the year. All right. Let's get to our economic data that came out this week. I can close that one. All right. Starting out with jobless claims. Initial claims came in at 211,000. Forecast was 222. Previous number was 220. Continuing claims came in at 1.844 million. Forecast was 1.89. Previous number 1.896. Pending home sales, month over month, grew at 2.2%. Forecast was 0.9% growth. Previous number 1.8%. And on a year-on-year number, it grew by 4.5%, same as the previous number. The house price index, month over month, grew at 0.4%. Forecast was 0.5%. Previous number was a 0.7%. And let's see here. The U.S. Federal Reserve balance sheet came in at $6.852 trillion, slightly below the $6.886 trillion that we had the month before. The ISM Manufacturing Purchasing Managers Index came in at 49.3. Forecast was 48.2. Previous number was 48.4, so a little bit of an uptick there. All right. So that's all the data we had for the week. It was a light week, like I said to begin. All righty. Well, let's get to the market recap. U.S. stocks higher, U.S. steel slumps, while Rivian surge. Okay. U.S. stocks rose on Friday, aiming to end the first week of 2025 on a positive note, despite strong market gains in 2024. Concerns over slower interest rate cuts and uncertainty surrounding incoming President Donald Trump's policies have dampened some of the optimism. Investors awaiting the ISM manufacturing PMI report expected to show December's factory activity slightly cooled to 48.2 from 48.4 in November. Well, we know that went up. This would mark the 8th straight month of contraction, as any reading below 50 signals a decline in manufacturing. However, the figure remains above the 42.5 threshold that the ISM considers consistent with broader economic growth. In corporate news, U.S. Steel dropped more than 6% after President Joe Biden blocked a $14.9 billion takeover bid from Japan's Nippon Steel, citing national security concerns and the importance of keeping the company under American ownership. Meanwhile, Rivian Automotive surged over 22.6% following its strong fourth quarter delivery numbers and news that the EV maker is no longer constrained by component shortages. Apple slipped 0.3% as data showed a 47.4% drop in foreign branded smartphone shipments to China in November. On a positive note, Meta Platforms rose 1.02% after promoting Joel Kaplan, a prominent Republican, to join its chief global affairs officer role. Oil prices continued to climb, with West Texas Intermediate up 1.4% to 74.17 a barrel, while Brent rose 1% to 76.70 a barrel. The gains followed hopes for policy support from China to boost its economic growth, with President Xi Jinping pledging proactive measures and the Chinese central bank reportedly planning interest rate cuts later this year. Overall, markets reflected cautious optimism, balancing positive corporate news with ongoing economic concerns. All right, well, let's get to some data. The December ISM Manufacturing Index. This comes to us via First Trust, and Nate Guernsey is who put this report together. All right, factory activity in the U.S. remained in contraction territory in December, though signs of improvement emerged. The ISM Manufacturing Index rose to 49.3, the highest level in 9 months. But still below the 50-point threshold, signaling expansion. New orders increased for the second consecutive month, reaching 52.5, and production expanded slightly at 50.3, snapping a 6-month contraction streak. However, much of this uptick may be due to seasonal restocking and manufacturers remaining cautious about 2025. Backlogs of orders inflated by COVID area demand continue to decline, with the backlog index at 45.9 for the 27th month of contraction. The employment index also worsened, falling to 45.3, marking the 7th consecutive month of contraction as companies adjust hiring to match weaker demand. Inflation pressures remain, with prices paid index rising to 52.5 in December, suggesting persistent input cost challenges for manufacturers despite sluggish activity. In other economic news, construction spending was unchanged in November, with gains in home building offset by declines in manufacturing and educational projects. Meanwhile, home prices showed moderate growth, with the Case-Shiller index up 0.3% in October and the FHFA index up 0.4%. Pending home sales rose for the second straight month, suggesting continued strength in existing home sales through December. Additionally, M2 money supply increased 0.6% in November, the largest rise since late 2021, but its annual growth rate of 3.7% remains slow, indicating potential downward pressure on inflation and GDP growth in the upcoming year. On the employment front, jobless claims fell last week, consistent with ongoing but slower job growth in December. All right. Next up, hot off the presses, Johnson wins speakership after reps switch votes. This happened right in the last hour or so before the market close. All right, Mike Johnson secured the House speakership after winning the first round vote with 216 votes, narrowly surpassing Democrat leader Hakeem Jeffries' 215 votes. Johnson, backed by former President Donald Trump, overcame initial GOP resistance, notably from reps Ralph Norman and Keith Self, who ultimately switched their votes to support him. Trump endorsed Johnson earlier, calling him a fine man of great ability, signaling his support for the new speaker. Johnson has emphasized aligning with Trump's agenda, focusing on border security, tax cuts, and spending reductions. Funny he didn't do a whole lot of good in his first term as the speaker. Hardline Republicans, especially from the Freedom Caucus, sought assurances from Johnson on procedural reforms and spending cuts. Rep. Ralph Norman expressed satisfaction after meeting with Johnson, highlighting his commitment to conservative priorities. In response to the infighting that followed Kevin McCarthy's ousting as Speaker, Republicans proposed a rules package to stabilize leadership by raising the threshold to initiate a motion to remove the Speaker. The new rule requires 9 GOP members to trigger such a motion compared to just 1 previously. Critics argue that the change reduces accountability, with Democrats warning it shields the Speaker from broader congressional oversight. The vote marks the end of weeks of GOP disarray, with Johnson emerging as a surprise compromise candidate after senior leadership hopefuls failed to garner enough support. Johnson aims to focus on unifying the Republican caucus and moving forward with key legislative priorities. Yeah, I doubt it. I think it would be just more of the same. All right, last up, also from Zero Hedge, David Stockman on the brewing U.S. debt ceiling crisis. So that's not some good news. All right. David Stockman warns that former President Donald Trump's promises of a new golden age of American prosperity will be overshadowed by a looming financial crisis. The U.S. faces a demolition derby in bond markets as the country debt spirals out of control, driven by bipartisan fiscal irresponsibility. That is very accurate. Both Republicans and Democrats, now part of what Stockman calls the Uniparty, have abandoned fiscal discipline. Republicans push for tax cuts and defense spending, while Democrats resist cuts to social programs. As a result, Washington is paralyzed when it comes to reducing deficits. Stockman contrasts the current debt crisis with past periods when political pressure on Congress helped control deficits. In the 70s and 80s, rising deficits directly impacted interest rates and Main Street businesses, motivating lawmakers to address spending. However, since former Fed Chair Alan Greenspan began monetizing debt in the late 80s, interest rates have become artificially suppressed, breaking this feedback loop. Today, the Federal Reserve can no longer monetize debt due to persistent inflation. The rising federal deficit, $624 billion in just the first 2 months of fiscal year 2025, ensures a showdown over the debt ceiling. Stockman predicts a massive political standoff as Trump and his advisors face a mother of all debt ceiling crisis. With the Fed unlikely to intervene, interest rates are expected to soar, potentially triggering a financial meltdown. The growing debt burden, coupled with the Federal Reserve's limited ability to control bond markets, will pose significant challenges to the upcoming administration, leaving little room for Trump's ambitious fiscal plans. Well, there's some awesome news, isn't it? All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to, wait for it, DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help you get on track. All right. Well, hope everyone out there has a wonderful weekend, and I'll talk to everyone next time. Adios.